Hello, I'm Bernard Hickey from interest.co.nz and welcome to the Economic Weather Report. Today we've got some figures on how much the economy grew in the March quarter. And unfortunately the news isn't good. GDP fell 0.3% in the March quarter from the December quarter. And it's up only 3% from the same quarter a year ago. Essentially, we're heading into a recession. The drought in the summer, remember it was so dry in the Waikato, that has hit rural output. Manufacturing is down because of the high New Zealand dollar, and consumer spending is having a rough time at the moment with the housing market in such a slump and with such a squeeze on disposable income from high petrol prices and high food prices. This actually forced the measure for GDP for expenditure down 0.6% in the quarter, and we're actually up only 0.45% from a quarter a year ago. That's on expenditure. So that shows that the consumer sector is really struggling. Now this was in line with expectations for most of the markets, and so the New Zealand dollar and interest rates haven't moved much on these figures. But they do reinforce expectations that the Reserve Bank is likely to cut the official cash rate later this year from about 8.25%, maybe down to about 8%. Interesting though, in the numbers from the Stats Department on the GDP, we had what we call the Index of Implicit Price Deflators. Now this is another measure of what's happening with inflation, and the news isn't good there either. Inflation was up 4.9% by this measure in the March quarter from a year ago. That's almost a doubling of inflationary pressures in the last year. I'm Bernard Hickey. That was the Economic Weather Report for interest.co.nz.